Welcome to Insights. I'm Eric, and we're going to do a gold review today. I think it's necessary. I think subscribers are fully aware of what's going on in the gold market, and it doesn't bother them one bit. At least I hope so, because they've watched some of the restricted content videos. But the rest of the gold community is going down the tubes because they watch small cap stocks and Bitcoin tear up to the upside, and they're wondering why gold is not moving. And silver is not moving either. But I've long stated that we were entering a period of frustration as the bearish energy build dissipates, and that's exactly what's taking place. So this could be open content for the community. I want them to be introduced to the evolution of the trade and to the matrix and consider a subscription because good information is worth it. So let's establish what we do here within the evolution of the trade. The first thing we do is find out where the primary trend lies. The primary trend is up at 25. We see it up in the monthly. It's up for 25 months and a 39% return. Inside of that, we look for the phase. The phase is blank, so we're in the A&E phase. Since we're no longer in alignment, we can see that here because the daily is down, the weekly is down, or up, and the monthly is up, and so we're out of alignment. And that kind of gives us a position of, okay, this is curling down on the daily. The primary trend is still up, so we've got our long core holdings or core positions. We're still looking for an entry, so we're looking for a reset here. A reset that will likely be triggered by energy, and this energy setup is extremely bearish. We'll take a closer look in a moment, but we have WA, which is low, which means participation is falling. That's bullish. We have DI, which is very negative, which is bearish, and DI2, which is also very negative, it's bearish. That means there's a huge distribution bias to the downside within the futures and options market. The concept of energy is kind of missed by most traders and even experienced traders, investors, all over. I very rarely see the proper use of energy. It's influential. It alters the alignment of the composite trend. Ultimately, it flips the primary trend, but most people completely ignore it or can't see it. So we're going to take a quick look at energy within the gold market here. And while it pops up, the subscribers already know it's bearish. We've been talking about it because we're down below the threshold minus 60 line. Both DI and DI2 have been below this for months. So we've been talking about a bearish setup for a month, and what it does is it generates these red domes over, we call them blocking domes. So let me highlight this to show only the bearish builds. And you can see there the white highlighted. So now the computer is saying, show me everything that's below the minus 60 threshold and has the characteristics of minus DI2 that are pretty negative as well. So since the primary trend flipped around, it's about 24 months ago, so it's about 2 years ago around here. We've had several blocking domes. Each one of these blocking domes causes a reaction in the price. This happens to be the largest of the blocking domes up to this point, and that's where I said there's no way this is going to jump the creek here above this price and really break out until this energy build is relieved. It needs to be relieved at least above zero, and in a previous experience I find that it actually will generate a slight quick bullish setup on the other side. And let me show you how that would work in the current setup today. Back in 2009 and 10, the price of gold corrected and we re-entered a primary uptrend. As it did so, it created several blocking domes to slow the advance. We are way down here, like we are today, way down here. And then what happened is during the reaction or the chopping phase, it can be an upward bias even, or it should be sharp declines within them. The invisible hand flipped its position and it went bullish. It created these very light, thin lines which represent bullish energy builds, which then the price of gold, which was grinding higher and struggling right in here, it really accelerated very quickly once it generated these things. I expect a similar setup to materialize sometime in 2021. Exactly when is kind of a guess. We'll have to react to it when it comes. I have my ideas based on seasonality trends and when gold tends to perform, and silver. but we'll have to wait for that. So what we're looking for and what you subscribers should be following is what energy is doing. And energy doesn't flip like in a week. It takes months to do this. So the frustration phase is going to last months. So if you're out there getting pessimistic on gold because against the primary uptrend, it's because you don't understand how energy is unfolding and changing. Energy will move higher, and the only way I know how to do that is subscribe to the computer. The computer is the one that tracks it. I don't calculate this stuff by hand. I programmed the computer a long time ago to do this, and I found how valuable it is to understand the dynamics between the complex nature of fractal trends. The primary trend is just one view of the trend. There's multiple views of the trend. Inside the trend, there's daily, there's 30-minute charts, there's weekly, and there's longer term stuff as well. But the energy release causes the shorter term trends to react. And that's exactly what we're seeing. We are seeing the shorter term react due to this energy build. And the shorter term has been down now for 4 days. And I'm telling you, if you couldn't see this one coming, you didn't see energy and you weren't a subscriber. But I warned everybody that we were going into a situation where this was going to have to dissipate. So we're in the process of dissipating that energy build right now. We're just going to have to wait. And it could be several months. It could be, a half a year. What are we looking at? Well, we can look at seasonality. There's also long-term seasonality. That's down in the matrix, way down here. And I suggest you download that, the seasonal table, and take a peek. But I'm not going to spend any time on that. The shorter term seasonal trends are here. And it goes back to 74. We can see that an ideal spot to release some of that energy would be March, and it would be May. These are the sell-off points. Now there are seasonal patterns within the election cycle, and they are targeting a different time frame. And again, go down in the lower part of the matrix and look at that. If you have any questions, you can contact me directly. I've talked about it in the restricted reviews. They're not exactly these time frames, but it's along somewhere. But these are logical points for which this energy build will then, which is negative and it's down here on the mat, will push up and above the zero line and generate a positive or a bullish energy build, which will ultimately drive acceleration and markup again. That's when everyone else is going to throw the towel in, but not us. I mean, I will be screaming at subscribers, or the computer will be screaming at us saying, buy, 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 and pay attention. Now, one last thing before I sign off on this one is in the name column, and this is largely for subscribers, the computer is highlighting or coding a down arrow and calm. This is compression, and compression of the multiple time frames. This is a concept that you can study more in the blog under the matrix, under definitions using the matrix. I'd look it up. Compression means it's similar to Bollinger Bands, except it's not Bollinger Bands, but the concept's the same. So if you're familiar with it, it's when you have volatility goes in and out. It goes through compression expansion. Rather than studying Bollinger Bands in terms of 1 or 2 standard deviations of that volatility, the computer is studying volatility across multiple time frames, the daily, weekly, and monthly specifically. So when you get compression, you're getting compression across multiple time frames. Compression is the precursor to a move. It's kind of like I always think about it as compressing gas or pushing toothpaste out of a tube. If you put force on it and you put that liquid or gas through a smaller orifice and you push hard, you're going to accelerate. The toothpaste explodes through the small opening. Gas will accelerate through a small opening, and it's the basis of compression and air conditioning. It's the acceleration that cools it, things of that nature. Compression is a precursor. Following that analogy, there's an explosive move coming. Considering the energy build is negative, that explosive move is coming down an elevator shaft, would be my guess. I mean, I don't know that for sure, but when I say this stuff, it's just through experience. I mean, people are pessimistic, they're ready to capitulate. You have a compressed market across multiple time frames, and you have to dissipate this energy build. No better way to do it than to flush it down the toilet and let everyone freak out. But as subscribers, then now the gold community here, as you watch this, you're going to do the exact opposite. And when you come back and see something of that, I would consider then reintroducing yourself back to the matrix, become a subscriber, and follow this stuff and dump all the rhetoric that exists out on the internet and social media. It's just mostly fear based on a lack of discipline and information. So that's where we stand with gold. I hope this helps clarify some of your fears and your concerns. There's more to this than I've shown you. I would suggest watching the confidence video that's below this one. It'll help you better explain what drives gold and how it moves relative to the structural things that are in place. Confidence is far more important than money creation. But if you have any real questions on anything else about precious metals or the matrix itself or the evolution of the trade, contact me through the blog or down below this video. You can leave some comments. I can get back to you. If not, thanks for watching the video, and I hope this puts your mind at rest a little bit more.